Adani Ports, 8.5% higher. B. Ravi, CFO of Adani Ports and SEZ, joins us right now on the show from Ahmedabad. Speak about the numbers and outstanding numbers out there. Ravi, really good having you. Thanks for taking the time out. I look at your numbers and we'll discuss all of the details in all of the things in great detail. But I just a preliminary look at your numbers, and while the reported numbers are good, the expansion in EBITDA margins is outstanding. How did you achieve that?
Yes, EBITDA margins for the ports by itself have always been upwards of 70%. This year we have also had SEZ income. There was that land lease income which comes in. As you know, we have a large SEZ. So that actually pushes up the margin even further. So coupled with the very good performance of the port, with the SEZ income put together, that is the big jump in the EBITDA margins. But at least even on the ports, it's always been upwards of 70%.
Yeah, which I believe is standard. Yeah, I mean, you have done 70, 72%, 73% almost on a quarterly basis. So the question really is this income from the SEZ division that you're saying is the reason for the expansion in margins? Is this something that is sustainable? If not on a quarter-on-quarter basis, then if you look at an annual basis, is this income sustainable, and therefore would margins stay northwards of 75% or 80-odd%?
It would not be appropriate to assume that it will always stay upwards of 75%, because SEZ is income, definitely it's sustainable, but to expect that to be constantly coming quarter on quarter would not be proper. Actually, SEZ income is always a little lumpy, so it could come in one quarter and that will jump up the EBITDA of, let's say, from instead of 70, 72 to 75. But yes, on a longer term basis, SEZ, as you know, we have about 16,000 acres. So 250 to 400 crores every year has been the achievement. And therefore, when that happens, the EBITDA margins would be around this much.
Right. Give us a sense about Abbott Point, divestment. The promoters have agreed to pay 235 million Aussie dollars at book value, despite low valuations recommended by independent directors. Company has so far received about 25 million. Do you expect the balance to come in this first quarter of FY14?
Yeah, that is what is targeted. There are certain approval which was there in terms of the lender, and therefore the actual transfer of the shares will be happening this quarter. And as soon as the transfer really happens, against that the balance amount will be coming. We are hopeful that it will happen by June end or at least by July.
So Ravi, just wondering, what does this money get used for, or what do the internal cash flows now get used for? Because unless I'm very wrong, your consolidated debt is approximately 10,000 odd crores. As on March, I think it was slightly northwards of 10,000 crores. Is there a target for the next year to reduce the debt equity, or you are comfortably positioned?
Well, today the debt equity, yes, you're right, the numbers of the consolidated debt, including those three, the Hazira and the Dahej also. Hazira has just started operations. I mean, it will be there this quarter actually. But even after not including the EBITDAs, just including debt of these companies which are either just started or about to start, a total debt of 11,000 actually translates to only a debt equity of 1.38 times, and that is extremely good for any infrastructure company. So to be able to even maintain 1.38 would be a great task, and I think it is, even if it goes to, let's say, 1.5 or 1.7, depending on what we would go doing further, I think it's very, very good.
You've shown good growth in cargo and container volumes vis-a-vis your counterparts. In this challenging environment, what drives your confidence of guiding for port traffic going forward, and what kind of volumes do you see there?
Yeah, I think, all the three C's that which are our core cargo businesses, and that is coal, container and crude, has been really doing well. In containers, we have actually particularly done very much better than all other container terminals in India. There has been a degrowth of 1%, and we have actually grown by 14%. And if you see on the western hinterland, there are hardly any container capacity which is even coming up in the next 3-5 years. And therefore, we do expect that the container business per se, especially when Hazira starts off in full swing this year, would be a very good growth factor.
Mundra alone, Ravi, what would the utilizations level be across the port and the container terminals?
At this point in time, I think we should put it because Hazira is just starting this quarter, and Dahej has done extremely well, and Mundra is of course doing very well. I think the utilization in 13-14 would be around 60-65% of our capacity if we try to put together. Initial years always it's about 50%, and as you know, we always build more capacities because port does take 2-3 years to come, and if you are prepared beforehand, then any additional incremental cargo and also cargo shift happens much faster, and that has been our secret of our growth. And therefore, though it could be a little lesser, about 50-60%, I think in a year, 2 years time, it will go back to that 70-75, which is when we'll start probably expanding again.
You have multiple drivers, and you're probably on multiple boats right now, Ravi. So for the consolidated entity, at the end of FY13, looking forward to FY14, I'm not asking for specific numbers, but how much do you think you can do? One, in terms of the total volumes that you would have, and two, maybe a sense of where the revenue and the profit trajectory would end up at the end of FY14.
I can tell you port by port. Mundra is already operational. We have done about 82 million tons, and we are targeting and we're hopeful to get above 100 million and probably become the largest port in the current year, 13-14. As I said, not exactly the guidance, but this is our expectation, and hopefully we will be achieving that. So we'll be doing much upwards of 100 million tons in Mundra. Dahej has been doing extremely well, and that's done 7.52 million tons in 13, and we do see a 50% jump again or more than that in the next year. Hazira has started off only this year, and Hazira probably in the first year itself, unlike most of the ports, would be doing anything between 5-10 million tons. These are all our expectations. Goa probably will be starting the end of this year, so it will be a small number. So looking to this, I think in terms of a consolidated cargo, which is 90 million tons, a little more than 90 million tons in FY13, would see a very big jump in FY14. That's what we are targeting and planning for. And similarly, in terms of the revenue numbers, obviously, it would also have a similar kind of a jump. As far as EBITDA is concerned, Dahej is doing almost on similar lines like Mundra, because there is a coal terminal there which is fully mechanized. Of course, it will not going up to that 70-72% EBITDA margin as yet. It's in the vicinity of about 65%. Hazira would be a combination of dry cargo as well as containers. So there again, we should be expecting something good in the current year.
Mr. Ravi, then leave us with a guidance on PAT and revenues for the consolidated entity, the port as well as the SEZ.
You're talking about you're asking about the numbers which may be there?
That's right. A guidance for sales and profits.
No, I'm sorry, we don't exactly give a guidance, but I think we have been having a very consistent PAT margins of. I'll give you the percentages. I think in terms of the percentage of PAT, it's been around 40%, 45%. I think it would be upwards of that. 1,754 crores of PAT of consolidated this year should again be seeing a similar jump consistent with the cargo and the EBITDA margins.
Ravi, just before we let you go though, just a quick word that we pointed out. There are concerns being voiced that the MOEF may not clear new expansion plans at Mundra. Would that be a setback for the company?
Please repeat that question.
I was asking you, there are concerns. I read that there are concerns being voiced that MOEF may not clear further expansion or new expansion plans at Mundra.
No. Actually, there's no such concerns. We have extremely good, waterfront. What we can do in the South Basin, which is having only 2 berths, 3 berths now, can go up to 13 berths. What is there in the West Port, that is near the coal terminal, what we have only 4 berths now, we can go up to more than 15, 17. And therefore, enough expansion capabilities are there. And there is no such stoppages of, any such concession, environment clearance of that. We've got clearance for those anyway.
You're clearing the air out there, Ravi. Congratulations on a very good set of numbers, and all the best for the year ahead.